right. It is that time again. Happy Friday. All you Melonheads. The weekend is nary upon us. It's been a heck of a week. Big news week, man. Big week this week. Oh my God. We got Evergrande finally defaulted. My God, that took long enough, didn't it? I mean, they've been pretty much, let's face it, they defaulted a long time ago. Somebody finally admitted it this week. Thank you, Fitch. I don't know where you've been, but thank you for saying what we all knew already. I'm so glad we have you here to tell us these things. S&P, Moody's, where are you guys? What's going on? I don't know. But we finally got Evergrande defaulted. We recovered a little bit. You know, we had that big dip a few weeks ago, started on Black Friday with the moronic story, we'll call it. I don't want to get myself in trouble talking about that. But that dip kind of faded away. Market's back up now. We're still not quite at all-time highs, but we're hanging out around there near the top. Market's priced for near perfection. I don't think we have near perfection. I don't care what Jim Cramer tells you, talking about how strong our economy is. You have got to be kidding me, Jim Cramer. My God, where does he get this stuff? I mean, 2 weeks ago, Jim Cramer wanted to use the military to round us all up and stick everybody. He was ready to declare war. We need to use the army. Go door to door. And now he's like, this is the strongest economy we've ever had. What a clown. What a clown. I can't believe I watched that guy for years. I'll admit I watched him for a long time. But I have canceled my cable. I do not get CNBC anymore. I don't. I unfollowed the man on Twitter. And you know what? I feel better for it. Cancel that noise. Doesn't do anybody any good. I haven't gotten any real value out of him, I don't know, ever. So he's gone. He's out the dough. What else we got? Energy prices. Energy is still down a little bit, although we've had some recovery in oil prices. We were down in the low 60s last week. We're maintaining that 70 level. We don't know what's going on. We still have a lot of geopolitical risk in energy markets. Mike Bender from Robin RC Models, he sent me a link this week to a chart showing European power prices. Man, what is going on in Germany right now? You guys, you know, all my friends out there in Deutschland, you guys have my sympathies. What's going on in your power prices? And you folks in the UK also. Although I don't think the UK power prices have really gone up that much, at least not at the consumer level, but they're going to because all the power companies are going out of business. So it's just a matter of time before those prices go up. We've been lucky here in the States. We have had a very mild fall so far. Still not even winter. But our energy markets here in the States are being priced as if winter's not even going to happen this year. We'll see, you know, because the weather can change any minute now. And then, we got our inflation read today. We got the highest inflation read in almost 40 years. Apparently, it's been 39 years since inflation was this high. All right, and once again, you know, I did my live stream this morning. I don't know how many of you guys were on that live stream this morning. It was actually the biggest live stream audience I've ever had in the history of this channel was this morning during my live stream. That was pretty awesome. So thank you to everybody who joined in on that. But really, I couldn't believe that the owner's equivalent rent is still not hitting the inflation numbers. They need the government, the BLS, and the Fed, they need to be so careful right now. Their credibility is seriously on the line. And I tell you, in terms of inflation, the one thing standing between us and absolute disaster is for some reason John Q. Public still believes that Jerome Powell and the Fed governors have this under control. It's the only reason why the dollar has any value left is because people think they have this under control. And if they keep BSing us about the rent not going up, we all know the rent has gone up. Statistics speak pretty loud. If they keep BSing us like that, then sooner or later, people are going to stop taking their word for it. And they're going to lose confidence in the Federal Reserve. And if John Q. Public loses confidence in the Federal Reserve, look out. Look out, because that will be just absolute mayhem. Anyways, I see the comments. They are rolling in already. Hello, everybody. Hello, Kevin W., Rich Dyer, Nicole Post, Tom Stencil, Cole Marsh. I see a lot of familiar names. I also see a couple I don't recognize, and some I can't even read because I don't know the language, so I'm not even going to try. I'll embarrass myself if I try to pronounce. But greetings, everybody, and welcome. Thank you guys for joining me today. I think it's time we got into some of these stories. And if you're new to the channel, I like to start things a little light with the most ridiculous story of the week. And this is a very, very serious story, though. Very serious. Over 40 camels barred from Saudi beauty contest over use of Botox. By the way, we need a new card in Monopoly game. You know, your camel is ejected from beauty pageant. Pay bank $200. Something like that. I don't know. My daughters discovered Monopoly a few weeks ago, so I have Monopoly on the brain. But man, look at this story. Over 40 camels barred from Saudi beauty contest over use of Botox. Authorities discovered dozens of breeders had injected camels' heads and lips with Botox to make them bigger and made other cosmetic enhancements. I S you not, folks. They had injected them with Botox. Saudi authorities have conducted their biggest ever crackdown on camel beauty contestants that received Botox injections and other artificial touch-ups, the state-run Saudi press agency reported Wednesday, with over 40 camels disqualified from the annual pageant. This wasn't one or two camels. This was 40 camels. 40 people did this to their camels. Saudi Arabia's popular King Abdulaziz Camel Festival, which kicked off earlier this month, invites the breeders of the most beautiful camels to compete for some $66 million in prize money. Botox injections, facelifts, and other cosmetic alterations to make the camels more attractive are strictly prohibited. They run a real tight ship at the King Abdulaziz Camel Festival. Jurors decide the winner based on the shape of the camel's heads, necks, humps, dress, and postures. I don't know about you, but I often look at a camel and I see the camel's humps and I say, oh yeah, no way those are real. No way. Anybody else get that? No? No? Me neither. Just kidding. I think it was a dead giveaway when one of the camels posted an Instagram selfie making duck face. And that's how we knew that there was some Botox in use. Anyways, folks, do not cosmetically alter your camels if you want to win the King Abdulaziz Camel Beauty Contest. You know, really, I blame society. I blame social media. I mean, when you live in a society that demands camel perfection, this is what you get. And is nobody thinking of what we're doing to these young camels? This is terrible. Someone stop the madness. Will nobody think of the camel children? I don't know what you call it. Camel child. What's a baby camel called? A camlet? I don't know. Anyways, now that the ridiculous is over with, let's get into the stories. We did a live stream this morning on inflation, so we'll talk about that a little bit later. But right now, I really want to just hone in a little bit here on the Evergrande story. I saw this article today on CNBC because I did a video earlier this week saying where on God's green earth are the ratings agencies? What is going on? Because this was on Wednesday. I did the video, and we didn't get a downgrade from Fitch until yesterday and Thursday, even though they officially defaulted on Monday. I mean, folks, there's tens of billions of dollars in these bonds. It should not take so long to get movement on this stuff. What is going on here? Late Thursday, Fitch Ratings said Evergrande had not confirmed payment of its latest debt obligation, triggering a default. S&P Global Ratings did not have a statement as of Friday afternoon and referred CNBC to its report Tuesday that said default looks inevitable for Evergrande. Now, why would they say it looks inevitable when they've already defaulted? What are these? Is this something like, do these agencies, are they fearing backlash from the CCP? Is that why nobody wants to do this? Moody's, another ratings agency, did not respond to a request for comment. All right, so they've adopted the Evergrande public speaking method of just saying nothing. We should have been calling this a technical default for a long time already, but nobody dared, said Alicia Garcia Herrero, Natixis chief economist for Asia Pacific, said on Friday. I agree. We should have called this a default a long time ago, and nobody dared. What are they afraid of? Are the ratings agencies now afraid to accurately mark these investments in China? Is that what's going on? Oh boy. If that's what happened, oh boy. Making the same stupid mistakes all over again. Anyways, there was another development in the Evergrande story. This came out today. China Evergrande chairman's stake drops to 59.8% on forced selling, according to a filing. And there is poor Mr. Hui Ka-yan, who has had to liquidate about $1.5 billion of his $7 billion net worth, which is mostly Evergrande company stock, which is rapidly going to zero. But there was an article not too long ago saying that about $1 billion worth of Evergrande stock had been posted on an exchange as if it was put up for collateral. And the only place in the world you can get that much stock is in Mr. Hui Ka-yan's back pocket. So it looked like he had taken out a large cash loan using his stock in Evergrande as collateral. And with the default news and Evergrande stock heading south, I guess what happened is whoever he took that loan out has margin called him and started selling his stock off. Again, that's speculation on my part. I don't have any proof of that. I'm just making that assumption based on the news that was out there last week. Anyways, it's only about a 2% reduction in his holdings, so he still holds nearly 60% of shares. The number of shares involved was 277.8 million, which is roughly $63 million. So it is not the full amount of the loan that he took out. It's nowhere near the full amount. So there's probably going to be a lot more selling of his shares in the not too distant future. Now, the other thing I want to talk about, since the default officially happened, I've been getting a lot of questions from you guys in the comments on my videos, a lot of questions on Reddit and on Twitter saying who's exposed, what happens now, what does this mean for this outfit or this bank or for Citadel? And it's really hard to tell, folks, because when you're dealing with derivatives, there is just the law is so foggy, and I'll be honest with you, I just don't understand a lot of this stuff. I mean, I'll try to be upfront with my own limitations here. Some of this stuff goes right over my smooth brain. But I want to call to attention what was going on with Archegos. And this is why the fallout from Evergrande is just impossible to estimate. Okay, let me zoom in a little bit here so you guys can see better. All right, so there's Archegos. This is an article from back in April. All right, and the reason I'm mentioning this is because I see a lot of similarities here that could potentially make this Evergrande story a lot bigger than it really is. Why regulators failed to spot the ticking time bomb at Archegos. And there's the founder of Archegos. And I just want to skip down to a couple of things. Despite owning huge positions in stocks in Discovery, Viacom, CBS, and many U.S.-listed China stocks, the fund was able to set up those secret from the market. All right, they kept that position in those stocks totally secret. That begs the question, how did the Bill Huang-owned Archegos manage to do that? And let's break it down for you. According to reports by Bloomberg and the Wall Street Journal, Archegos built up these positions through a derivative instrument called a total return swap. Right? According to Forbes, family offices are required to report stock and derivative positions above $100 million in 13F filings. However, swaps are excluded from the 13F filing requirements. So this is how Archegos managed to take out such a huge position without anybody knowing about it, because these swaps were not required to be filed in 13Fs. Now, typically, when a hedge fund takes out a massive position in a company, whether long or short, they have to file this 13F form that will pop up in press releases, and you can see it on a lot of the brokerage accounts. So he used a total return swap. So I just want to explain a little bit here, because they're relatively complex instruments. A total return swap is a swap agreement in which one party, Archegos in this case, makes payments based on a set rate. All right, so they're paying a fixed fee while the counterparty, who was the banks, Nomura, Goldman, Credit Suisse, they make payments based on the return of an underlying asset, shares in this case. This includes both income it generates, such as dividends, and capital gains. All right, so what happened was this guy did not buy the shares. What he did was he borrowed money from the banks, and they bought the shares for him. Now, the shares were kept on the bank's books. He owned the swaps. So what he had to do is he had to pay them a fixed monthly fee, i.e. interest on the loan. And in return, any money that those shares made, if their share prices went up, he got paid from the banks the amount that the share prices went up. Or if the companies paid a dividend, the banks would pay him the dividend. Now, the flip side of that coin, and the way that this really blew up, is that if those share prices go down, Archegos had to pay the banks the difference in the share prices. Now, because of these cloudy 13F filing requirements, the banks didn't realize that this guy, what was his name again? Was it Huang? Bill Huang? He was going all around the world to all these different banks, and he took out these swap positions with all the different banks, and none of these banks looked close enough to realize this was going on. They didn't realize that he had taken out the same bet with all these different banks, and what he had done is he had leveraged himself 5 times the size of his own fund. So when those shares went down, and all those banks said, Mr. Huang, your total return swap position is down, you owe us money equivalent to the drop in the share prices, he didn't have it. So the first bank that sent him a margin call, they liquidated his fund and took his money. The second bank that did it tried to, the money was all gone already. And in this way, this one hedge fund ended up costing these 3 banks almost $10 billion in losses. He was so leveraged. He was 5 times leveraged the size of his fund. And none of the banks bothered to look at him. Now, keep in mind, this guy had been banned from trading securities in Hong Kong. In 2012, he was accused of some kind of securities fraud in Hong Kong. And yet he was able to take out these tens of billions of dollars in positions with banks all over the world. And none of the risk management departments at any of these banks were like, here we have a guy with a criminal background in securities fraud. Maybe we ought to dig into his books a little bit before we let him take out this massive position. Nope. They just gave it to him. And all those banks lost billions. I mean, this was a huge event. And it was this one obscure fund that a lot of people hadn't even ever heard of. I had never heard of Archegos before this. Now I have. So if this guy was able to secretly take out positions in these stocks that were 5 times the size of what his fund had, so basically he took out all this leverage even though he had no collateral to back it up. And it worked as long as the assets kept going up in value. And then as soon as those shares started going down, he was wiped out. And not only was he wiped out, but the banks that he took out those swaps with, they ended up taking it on the chin. And that's the real fallout risk with Evergrande. All right, these numbers, when you hear 13 billion in bonds offshore or 20 billion in offshore denominated bonds, it's not just the nominal amount of these bonds that is the big question. It's how much of this derivative, how many of these credit default swaps, or is there some kind of a total return swap that's out there? How exposed are the banks? How many different hedge funds have done something like this? And there's no way to know because they're not required to report it. That's how this could potentially blow up the financial system. So when people keep saying, who's exposed? How much exposure does this bank have or that bank? Folks, there's no way to know. We won't know until this stuff starts getting liquidated. Anyways, let's go to a couple of these questions here. Jack, you're losing your high social rating with the CCP if you keep this up. Mark the stump grinder. That is a badge I wear with pride. I had somebody mention on my live stream this morning, hi, I'm an expat in China. And I was almost upset. What do you mean? I'm not banned in China? I try really hard to get banned in China. I got to step up my game, man. I mean, when I saw that I had like a total view history of three video views in all of China, I'm like, okay, well, that's 1, 2, 3 views from Communist Party censors. And I was hoping I'd been blocked, but I guess I haven't. I got to step up my game, man. I'm slacking in the freedom department. Next, you hear Camel's drinking or dining from anorexia. Yes, Mike. Camel's dying from anorexia. So long on Botox, says INF. No, I'm not long on Botox. Who Botox in a camel? Can you believe this stuff? You should see how they. Yeah, inflation must be double, says Mark Donovan. You know, this is the second time today. I can't remember the name of the website that will post what the actual inflation number is using the 1980s calculation methodology. And we are actually every bit as high as we were in the early 80s right now in inflation. So, and yeah, I mean, it's not quite double, but it's close. CPI is somewhere between 10 and 11 right now if we were to calculate using the same method we used in 1981. When their value drops due to rating changes, game over. Yep. I mean, the ratings have already changed. I'm assuming you were talking about the Evergrande bonds, INF. It's just a matter of when these bonds become absolutely worthless, which apparently they're still not worthless. I don't know how, but they're still not worthless. Someone out there still thinks they're getting their money back. They won't. I mean, if you're holding dollar-denominated bonds in these companies, you're not going to get your money back. Great RTD drive-by. If you can help me understand SPV in an example. SPV. I got to look at that one. Same with the other tops, along with a huge chunk of the party who like to gamble. Yep. Wow, you guys are really keeping the comments. There's a lot of comments coming in today. Keep them coming, guys. I'm beginning to think the reset will not happen until 2023, Neil Hahn. That is a good point, Neil. It could go that long until 2023. If it does take that long, though, it means they let inflation run even hotter than they do right now. Because inflation is at 40-year highs, and it's going higher. The rent number is going to keep going up. It's going to go up a lot further now. You guys saw that chart that I put in there this morning or in my preview video last night. We'll look at it again for a little bit today. But if the inflation numbers still have to go up because this big move in the housing market still hasn't shown up in CPI. So if the big move in the housing market, I mean, it's like 14, 15% increases in home prices in 1 year, and CPI is saying 2.4%. No way. No way. Not even close. So we have higher CPI reads coming. And there's a lot of political pressure to fight inflation right now, right? The Biden administration's poll numbers are not good, and most people surveyed are saying it's because of inflation that his poll numbers are not good. Well, then there's pressure, political pressure, on the Fed to actually do something about inflation, not just go on TV and say transitory until they're red in the face. No, they actually have to do something, i.e. taper faster and hike rates. And, I was watching... what was the name of the channel? I can't remember. Oh, son of a gun. I feel so terrible. I can't remember the name of the guy's channel. He does a live stream with Mario Ineco from Ineco 64 every Friday. Somebody post the name of that channel for me, please. But I was watching their live stream today, and it's Mario had answered one of my questions. It looks like they're pricing in a little bit of a possibility of a rate hike as soon as March. So we could be looking at possibly 3 rate hikes next year. That might seem a little extreme right now, but as these CPI numbers keep going up, the pressure on the Fed is going to get higher and higher. So if we do go to 2023 before we get this next big crash, it means we let inflation run higher because we haven't hiked rates yet, or we haven't hiked rates far enough yet. So we'll talk about that a little bit later. I want to show you guys my chart of the 10-year again. Don T, sir, thank you very much for the super chat and for the support of the channel. Again, thank you, sir. I very much appreciate your ongoing support. I hear and read things being said about the dollar potentially losing its status as the world's reserve currency. How would that happen, and how would the next reserve currency be determined? Question mark by the Fed. All right, so my history is a little rusty here, but really the reason why the dollar is the world's reserve currency is centered around the oil market. All right, the U.S. had a deal with, it was either Saudi Arabia or all of OPEC, but it basically guaranteed that the global oil trade would be conducted in dollars. right? And because the global oil trade was conducted in dollars, that meant if anybody in the world wanted to buy oil on the open market, that first they had to buy dollars, right? If you were in France, first you had to trade francs for dollars, then you could trade dollars for oils. If you were in England, you could trade pounds for dollars and then trade your dollars for oils. Oils for oil. All right, so that was the way of things for decades. It has been, and that has forced, because oil is such an important commodity for every economy around the world, it forced every country to hold a reserve of dollars, to hedge against their own currency fluctuations, and to make sure they always had a certain amount of dollars on hand to buy oil. So it forced everybody into the dollar market. Well, now we're starting to see countries are starting to trade outside of what's called the petrodollar, right? That's where the term petrodollar comes from the oil market, right? You've got Iran is selling their oil on the black market. Technically, they're not allowed to sell their oil, but Iran is trading oil into Asia. That is not being conducted in dollars. You've got large trade agreements going on between Russia and India that I'm sure will involve oil and natural gas. That is not being conducted in dollars. Right? Now, the reason Saudi Arabia and a lot of these other countries signed on for the petrodollar was in part because of the guarantee they got from the U.S. military that, hey, you use our currency, we got your back. Well, the U.S. military, after what happened in Afghanistan, doesn't carry the same clout that it did a little while ago. So between the debasement of the dollar, now think about it, if you hold dollars in your reserves, say I'm Brazil, right, and I hold dollars in my reserves, what happens to my savings when the Fed prints? Fed is stealing from Brazil when they print, right? Just like the Fed is stealing from you and I when they print dollars. They're taking value out of our savings account. Well, when the Fed prints, they're also taking value from every country in the world that has agreed to trade for oil in petrodollars, i.e. in US dollars. So they're stealing that value out of the dollars that all these countries are holding. Don't you think that might piss them off? Because they don't get any of the benefits of the quantitative easing. When the Fed prints money and pumps it into the U.S. economy, it doesn't go to Brazil. It doesn't go to Russia. It doesn't go to France. No, we get all the benefits. So it allows us to siphon value away from other countries when the Fed prints. And other countries aren't going to put up with that crap anymore. I mean, would you? If you didn't have to, what we've done is we've created an incentive for these countries to find an alternative to our currency. And, this modern monetary theory nonsense that we can just keep doing this. We can just keep debasing the currency forever without consequence. We're already starting to see the consequence of that. So we cannot keep abusing our trading partners by debasing our currency that we force them to hold, because we're stealing from them when we do that. So, Don, once again, thank you, sir, for the super chat, and excellent question, by the way. Check out the Economic Ninjas channel. He's done a lot of videos over the last few weeks about other countries making agreements outside of the dollar that kind of shows the dollar is very slowly losing its status as the world's reserve currency. It still is the world's reserve currency, but it may not be that way forever. Dumb Money Media, the King of Money, thank you, sir, for your continued support of the channel and for your super chat. How spicy do you think the Reggie news is? I think it's super spicy. We got to interview him. I'll send some DMs his way and see if he bites. Okay, the Reggie news. Thank you, sir, for sending me the link. Now, I haven't had a chance to do a lot of research on this one yet, but I did see the link that you sent me. The guy's name is Reggie Middleton. And what the King of Money from Dumb Money Media here is referencing is he recently won a patent suit with the U.S. and Japan that basically said he invented DeFi, that he owns the intellectual property on decentralized finance. Right now, got to be careful what I say here because I haven't read too much about this just yet. But let me just say this. A lot of the reason why the crypto market has pumped so much, and a lot of reason why these run-ups and these sell-offs are getting so much more violent recently is because of all the leverage in the crypto market, in the crypto sphere. And a lot of that comes from these DeFi apps where people are borrowing crypto, or they're borrowing tethers or whatever, and they're using it to buy crypto assets. And then when these sell-offs happen, these margin calls get triggered, and all these long positions get mass liquidated, and the sell-off starts to snowball, and we get these massive $5,000-$6,000 moves overnight. Usually during periods of low liquidity is when they strike. Right? Does this sound familiar, silver guys? Does this sound familiar? I mean, they're using leverage and they're using mass liquidations to suppress the price of crypto now. I guess they learned something from the comics. So the fact that this guy, Reggie Middleton, has just been awarded the patents, I mean, is he going to go and sue all these DeFi apps now? Because if he drives all these decentralized finance platforms out of business, there's a lot of people that speculate that these decentralized finance platforms are all just Ponzi schemes. The fact that they're offering such ridiculously high interest rates to lend them their crypto. So if these DeFi apps are Ponzi's, which it's a good bet some of them are Ponzi's, and this guy goes around suing them all, forcing them to write him big checks, some of them might fail. It could be very disastrous for the crypto market. All right, so I haven't done that much research on the subject yet, King of Money, but thank you for the super chat, and thank you for sending me the link. That is potentially a very big story. So we will keep an eye on that one. All right. I think it is time to shrink my melon again. I saw this story, another big story. This one came out just today. U.S. Justice Department launches expansive probe into short selling. An expansive probe into the expansive short selling, which has been very expansive for me lately because my AMC shares are in the toilet. Thanks for nothing, Ken Griffin. But this could be big. This article does not mention Citadel specifically, but it could implicate Citadel. All right, the U.S. Department of Justice has launched an expansive criminal investigation into short selling by hedge funds and research firms, according to two people familiar with the matter. Investigators are probing firms' trading records, public reports the firms issued on certain stocks, and the web of relationships some may have used to push stocks lower, the people said. Does anybody remember Iceberg Research? Do you guys remember that story? When Iceberg Research, this research firm nobody had ever heard of, who had like a P.O. box address in some random town, and that was like the extent of this company's existence. All of a sudden, they released a research note on AMC stock. This was a few months ago, and CNBC and every network picked up this big expose by Iceberg Research. For some reason, this fund that had no employees and no history, every single network picked up this research report, and shares of AMC tanked stock. Shares of AMC stock tanked. Sorry, guys, I'm a little off my game today. Do you guys remember that? I think this could be what they're talking about here, that are these research firms really just paid hacks by these short hedge funds that are paying them to go out and write up reports that fit what they want them to do, publish it. And I wouldn't be surprised to see if the press had a hand in this. Anyways, I found this story interesting. This could implicate Citadel. This could implicate some of those other outfits. I don't know that for a fact. I'm just speculating. But the Justice Department, which declined to comment on Friday, issued subpoenas to more than 24 companies earlier this year and is scrutinizing trades in dozens of stocks, according to the two sources. Where is it? Sorry, this thing is jumping around on me. Bloomberg News first reported the probe on Friday, adding that authorities are examining whether the funds engaged in insider trading or other abuses. Anson Funds and Marcus Aurelius Value are among the firms under the scanner of the investigators, according to Bloomberg. The companies did not immediately respond to requests for comment, channeling Evergrande and Kaisa. Among the stocks whose trading activity the Justice Department is examining are Luckin Coffee, GSX Tekadu, on which Carson Block's Muddy Waters Capital and Andrew Leff's Citron Research circulated research, Bloomberg reported. My God, I would love to see Citron go down in flames over this. In a statement, Citron Research said it knows of no wrongdoing and has cooperated fully with the government's investigation. Now, keep in mind, folks, this is not the SEC. This is the Department of Justice. The SEC can't throw you in jail. The DOJ can. The SEC can only fine you. The DOJ can throw your butt in prison. So there are a lot of scared short hedgies out there right now. Trading in short targets such as Santa Ana, California-based Bank of California, and Mallinckrodt is also being examined, Bloomberg reported. The Justice Department probe comes after the U.S. SEC regulator earlier this year said it's considering measures to require big investors to disclose more about short positions or bets that stocks will fall and the use of derivatives to bet on other stocks. So this could be very big. This could be very big for the meme stock movement, for the apes. We don't know. But the other thing I just want to point out, these investigations take a long time. Nothing happens fast, right? These are lawyers and investigators and the legal system. Forget it. This is not going to develop overnight. So if you're expecting, to run out and buy a certain stock based on this article, might be a little soon. Might be a little soon to act. Not a financial advisor, not financial advice. Do your own research, your own DD, arrive at a decision right for you based on your unique situation. And real quick, I also saw the review of rules by the SEC was prompted by January's GameStop saga and the meltdown of Archegos Capital. That is the second mention of Archegos today. So that is interesting. Anyways, let's go to a couple of comments here. I haven't taken that many comments today. Okay. What do we have? Rethinking the Dollar, says Inspector Jason. Rethinking the Dollar. That is the name of the channel. Thank you, Inspector Jason. Yes, and I apologize to Rethinking the Dollar. I just could not think of the channel off the top of my head. Sorry, I'm forgetting a lot of stuff today. I guess that's what happens when you get into your 40s. You start to forget stuff. But that's okay. I hear that gets better with time. So, Rethinking the Dollar is the name of that channel. They do a live stream every week with Mario and Echo. From an Echo 64, but that is a great channel. I've caught a couple of his live streams now. He is very big on individual liberty, personal accountability, personal freedom. So, highly recommend Rethinking the Dollar. Rethink a gold-backed dollar. Yes, Neil Hahn. Neil, I think that's where this ultimately goes. I think with the sell-off that is coming and the inevitable response is going to be to try to print their way out of the next crash, which is not going to work because we already have an inflation problem. If they go try to print their way out of a crash, they're going to have a bigger inflation problem. Then they'll try something else that won't work. Maybe this central bank digital currency will be what they try, but that's just going to be another Rentenmark. It's just going to be another Bolivar Fuerte, just another failed attempt to make the same stupid mistake over again, thinking it's going to solve your problems, like has happened all throughout history. And then after that fails, I think eventually the world comes to its senses and realizes, folks, we need real money in order to do this right. We need to go back on a gold standard or something resembling a gold standard. I don't know what that will ultimately look like, but we're going to make the same stupid mistake several more times before we get there. When that happens, gold will become unobtainium because the central banks will buy up all of it, which means if you have some of it, you will be the new aristocracy that comes out of that system. And this could be 20 years from now, 50 years from now. I don't know. All right. But that's why always I'm dollar cost averaging in the gold and silver. Even if I think gold and silver are going to sell off when this big market sell off happens, I could be wrong. And just in case I'm wrong about that, I'm dollar cost averaging in. But I also have some dry powder on the side. So if that big sell off does happen, I can pile into it. This is from Cole Marsh. We go back to gold when the crash is finally realized by the masses. Cole, it's pretty much what I just said. I agree. On the Cayman Islands or Jersey or somewhere, there are 10,000 different offshore companies registered to the same building at the same address. The building is 3 stories high. Google it. Yawser Doinkosaurus or Doinksrus. That's a great name, by the way. Probably in the Caymans, and I think you have the same thing going on in Cyprus, where you have these law firms that will set up shell companies, which are just basically companies that do no business. They're just places to park your wealth anonymously. And I know the Cayman Islands is one place a lot of that happens. I didn't know about Jersey, but I know Cyprus is another place where a lot of that is going on. So, and that was what the is it the Panama Papers was really about? Is it exposed a lot of that was going on, and a lot of powerful people were using these shell companies to park the wealth that they had acquired through questionable means. 50-year cycle and 100-year cycle. Got to read history and put the two together, and you'll see things more properly. Also interesting, Neil. I do see a little bit of cyclicality going on here. Don T, I agree, everyone. The crash of the dollar will lead to FOMO in PMs. The dollar is eroding now, just wondering what will lead to its eventual crash. Will it happen suddenly or after much eroding? Don, I think it will happen suddenly after much eroding. Like the erosion has already started in the dollar. We have this high inflation now. But the actual hyperinflation, we're still a long way from that. I mean, the definition of hyperinflation is 50% month over month inflation, right? We have, what was it, 0.6%? Was that the monthly number, or 0.8% was the monthly number? So to actually get into true hyperinflation, we need to be 50 or 60 times where we're at right now. You don't get that without that psychological panic built into the inflation. Right now, we have the expanding money supply chasing fewer goods, right? We've got your good old-fashioned mechanical inflation. They increased the supply of money, but they didn't increase the supply of goods, so the prices are going up. Hyperinflation happens when people get mentally afraid of the dollar losing its value, and they rush to get out of their dollars as fast as they can, buying anything and everything they can, which creates this sudden parabolic, infinite demand for everything, driving the prices through the roof. And that's when you get hyperinflation. That's your Weimar Germany scenario. And that's why I said earlier that it's really important that the Fed pay attention to its credibility, and why they can't keep BSing the public with this owner's equivalent rent thing. If they don't start being more upfront about what's going on, if they don't stop BSing us with the transitory nonsense, thank God they dropped that, then people are going to stop believing that the Fed has this under control. For some reason, people still think the Fed has this under control. I don't know why. I don't believe the Fed has this under control. I think if you're watching this live stream, you probably don't believe the Fed has this under control, chances are. But most people, and I bet you a lot of you guys have had a similar conversation with some friend or family member who says, I don't think that'll happen. I think they won't let that happen. They won't let that happen. It could never. Right, that normalcy bias. If the public at large starts to lose faith in the credibility of the Federal Reserve, that's when we get that hyperinflation. And I pray that never happens, because that is not a world I want to live in. That is a world I'm afraid is coming, but I don't care to participate in that world. I wouldn't mind being wrong about this one. I will prepare for it with my precious metals and raising cash to benefit from a sell-off prior to that hyperinflation starting, which I believe is coming. But again, that unless you've ever lived through it, which I haven't, I've only read about it, but I just can't imagine anybody really thriving in that environment. Hyperinflation is rapidly rising inflation, typically measuring more than 50% per month. Thank you, Neil. Very good. Cole Marsh says, hit the thumbs up. Thank you, Cole. Yes. Let's remember, folks, to inflate that like button, which also serves to inflate my ego further. And it helps get this channel out to more people via the algo, the all-important algo. Got to make sure we stroke my ego, stroke the algo, get more subscribers on this channel. I would be forever in your debt. And Dumb Money Media, sir, thank you again for the super chat. I'm hoarding cash, waiting for any big dips. Until then, I'll sit on my worthless fiat. You think the IMF will force the Fed to raise rates? The IMF forced the Fed to raise rates. I think the IMF needs the U.S. more than the U.S. needs the IMF, to be honest with you. I can't imagine them really exerting that much pressure on Powell. Now, the IMF, you got a lot of these globalists. So maybe I could see them putting pressure on other people in D.C. who they in turn put pressure on Powell. They may be able to indirectly pressure the Fed. But as far as the IMF directly putting political pressure on the Fed, I think that's the other way. I would say the other way around. I could be wrong about that, but I'm thinking the Fed is more likely to sway the IMF than the IMF to sway the Fed. Anyways, I got a comment from Nicole Post on the post that I put in YouTube asking for questions and comments for the subject of the live stream today. Here, let's get my melon out of the way. This is the Federal Reserve balance sheet. And she was asking me to comment a little bit on the taper and what some of the data on the balance sheet means. And I was talking to her a little bit on the post. It's a little early yet to be able to say, but I'm just looking at this trend right here. This is the Fed's balance sheet over like the last 8 months or so. And the taper would have started back right about here, beginning of November. And it's just a little bit early to say a trend has emerged, proving that the taper has started. Somebody who's better at digesting the data may be able to look and see the trend has already emerged, but I think it's going to be a few more weeks before we actually see this curve leveling off, meaning the Fed taper is really taking effect. All right, but I think we'll probably see that within a week or two. So I'll do more on that lately, but a lot of people have been saying that they don't think the Fed is going to taper, that the Fed can't taper, and I did a video about this last Saturday. I think you're underestimating the Fed. I do think they know what's going to happen. They know that markets are going to crash if they taper. I think they're going to do it anyway. I really do, because if the Fed crashes the market, John Q. Public is going to beg Jay Powell to turn his printer back on. Right now, Powell is saying, you guys want to fight inflation? All right, let's fight inflation. Let's ditch transitory. Let's slow down the printer. Let's hike rates. You guys wanted it. And then as soon as things get a little bit painful, right, the first time the Dow sells off 1,000 points in a day or 2,000 points in a day, I'm telling you, D.C., Congress, everybody, the public, they are going to be begging Powell to do something, inject liquidity, please. He'll say, okay, he'll turn the printer back on, and that's when we get the big inflation. That's when it really starts to get out of control. But I think he'll crash the market first, because right now all the political pressure is on Powell to fight inflation, because Biden's poll numbers are down because of inflation, because people are angry because it's getting expensive to fill up the gas tank, or it's getting expensive to eat, or the rent is going up. People are pissed off. So they want somebody to fight inflation. So Powell will fight it, because the political will is there. But I don't think the public has stomach for a fight. I think once the reality of what inflation looks like, what fighting inflation looks like, once that reality sets in, I think most people will just tuck tail and run. So that's my interpretation. Anyways, we're going to keep an eye on this curve here. This is the Fed's balance sheet. And I think we will start to see this incline will start to slow down. It will level off. It won't go flat. It's going to keep going up, but it's going to be going up slower as they taper off their asset purchases. And I have shown you guys this chart before. I want to keep mentioning this chart because this is a big deal. This, in my opinion, is the most important chart in the world right now. This is the yield on the U.S. 10-year Treasury note, which looks like it recovered today. I thought this was down for most of the day, but it looks like it's recovered. And this is going all the way back to 1971. I've shown you guys this one before, but for you new folks, I want to show you again. All of this line here, this red and purple line that I drew, this, in my opinion, represents the maximum sustainable interest rate that the U.S. economy can tolerate. And you will notice that line is declining because as this mountainous pile of debt, both public and private, in the United States, as it continues to balloon, then the amount of interest rate that we can stomach is going down and down and down. And every time we have touched this line or threatened to touch this line since 1987, the market has thrown a fit. This one right here, this is Black Monday, 1987, the single largest stock sell-off in history on a percentage basis. That happened right here. 1994, the bond market crash in Japan. 2000, the dot-com bubble bursting. 2007, the global financial crisis. The Christmas Eve sell-off of 2018 and the ensuing unpleasantness of 2020. Every time for the last 40-some-odd years that we've gotten anywhere near this line, the market has thrown a fit. And when you zoom in on this, we look next year at 2023, that line is somewhere between 2.5 and 2.3% on the U.S. 10-year Treasury note. And I mention that because they're talking about 2 rate hikes next year, possibly 3. We're talking about a taper. We're raising the debt ceiling. These are all things that are going to put upward pressure on interest rates. And if we put enough upward pressure on interest rates that we threaten to take out this line, you can bank on a very sudden and violent sell-off in the stock market. And that's the big event that I'm watching for next year. And, Powell's, they're getting together next week. And supposedly Powell is going to announce that they are going to double the pace of the taper, which means they'll have their asset purchases down to 0 by March. And that they might even hike interest rates in March. And that we could be looking at 2, maybe 3 interest rate hikes next year. Folks, this interest rate is going to climb, and it's going to climb fast. And if we break 2.5% early next year or 2.3% late next year, all hell breaks loose. So I'm going to keep mentioning this chart. You guys will be sick of hearing about this for a while. And I guess if I'm wrong about this, again, it's another one that I wouldn't mind being wrong about. But my plan is to go long volatility to short the market if we get anywhere near this line. Because I can't see, with the debt pile as big as it is, I can't see the economy surviving 3% interest rates again. I just can't. And I would also mention that even if we don't break above this line, even if we don't hike rates and we just trade sideways, this line goes to 0 in 2033. So at our current trajectory, at our current rate of accumulating debt, by 2033, the U.S. economy will be able to sustain 0.0 interest rates, which means negative rates or economic collapse. So we got that going for us, which is nice. And the reason I say that is because, look, we're talking about fighting inflation right now. We're talking about bringing Paul Volcker back, right? We're going to fight inflation like we did in the 1970s. Well, look what rates did when we fought inflation in the 70s. Whoops. We went from 7.2% on the 10-year to almost 16. Not going to happen this time. It's not going to happen. And remember, they've changed the way they measure the inflation. The inflation right now is every bit as powerful as it was back here. So if we were serious about fighting inflation, we'd have to do something like this. We can't. We can't. The economy will collapse long before we get to a spike that big. But Powell's saying they're going to try. So watch that line, folks. Watch that declining threshold, that tolerance level for debt. Because we are a nation of drug addicts. The drug is easy money. The drug dealer is the Federal Reserve, and we are the drug addicts. And because we have taken bigger and bigger and bigger doses, we've developed a tolerance for it. And we need bigger and bigger doses to get the same effect now. The problem is if the dose gets any bigger, we die. Hyperinflation. And that bird is coming home to roost, folks. We are almost out of time. So let's see what we have here. Let's increase again. My goodness, the comments. Don T, please move your melon. Okay, I'm sorry, folks. Let's get my melon out of the way. Let's bring that chart back up. We'll make me really small here, and we'll put this chart back up. Oh, geez, I just moved my line. Oh, I made a mess. This is why we can't have nice things. Let's put that line back where it belongs, somewhere right there. All right, Don T, here's what I was talking about. This is the spike fighting the interest rates in the 1970s. And this is what Powell is saying we're going to get back to. And that just ain't happening. We just can't afford to do that again. Ralph Potts says, in the 70s, they did not seem to raise rates fast enough. My first mortgage was 13.9% in 1980. My goodness, 13.9%. Can you imagine, folks? Think about your mortgage payment right now what your interest rate is. Probably somewhere between 2.5% and 4.5%, right? Can you imagine what your monthly payment would be on a 13.9% mortgage? Do you really think our economy can sustain that? I mean, think about how big your monthly payment would be. How just we're dealing with two different worlds now. We do not live in the same planet we did in 1980. I mean, my mortgage payment would be bigger than my salary if it was that big. Neil Hahn says, Ralph Potts, that was only 50 years ago. We are repeating a 100-year worldwide cycle now due to the something I can't say 100 years ago. Neil, you almost got me booted. There's certain words that like trigger the YouTube police. I can't say them or they're going to stop showing my videos to you guys. The censorship is real, folks. It is very real. Cup and handle equals bullish. Line will go up. Where is the cup and handle? Let's see. Is this a cup and handle that you're talking about? Who brought that up? Yawzer, is this what you're talking about? A cup and handle here? I guess I can see that. No one knows how this QE is going to turn out. We have the tool to stabilize financial assets with crypto and get rid of poverty in most undeveloped countries where financial services don't exist. Mike, I agree. Crypto does have that potential. Crypto has its own set of problems, though. There's, unfortunately, the crooks are running amok in the crypto ecosystem right now. And I'm afraid they're going to cause a lot of pain. And it's going to take people years to trust it again if that happens. If Evergrande takes out Tether and the crypto market crashes, it's going to take a long time for people to have faith in cryptocurrencies again. I really hope that doesn't happen, but understand, folks, if you're trading in cryptocurrencies right now, like I am, I'm still long Bitcoin and Ethereum. But you need to understand the risk. Tether could go at any moment. All right? If you're in cryptos, you must understand that risk. Well, Fed wants to buy it all, so they need a crash. Interesting, Remy. You know, the Fed, and I just say the globalists, you know, the elitists in the government, they want to buy it all. I mean, we had Saleh Amarova withdrew from consideration for the control of the currency. Thank God. She wanted to take over the whole banking system. She wanted the Federal Reserve to take over every private bank account in the country. Can you believe? My God, who would hand that much power to anybody? I can't imagine that she was even considered for that post. My God, what are these people drinking and where can I get some? Make money on the volatility index early next year, possibly as early as next week, depending on Fed talks, says Overstew. You know, Overstew, that's a very interesting thought. It's funny you should mention next week. I wasn't going to talk about this, but next week we have what is known as quadruple witching. All right. On next Friday, you have the simultaneous expiration of stock options, index options, single stock futures, and index futures. All right. That happens 4 times a year. All right. The third Friday of December, September, June, and March. Well, next Friday is quadruple witching, which is could potentially result in a big spike in volatility. It's not a given, all right, especially not because stocks sank last week and then they bounced back up. So stocks have really traded kind of flat. I mean, I know we had this big sell-off and everything, but there hasn't been that much of a net change in these last few days. But if we have volatility early next week, then we could have big volatility late next week because of that quadruple witching, because of all of those derivative products expiring at the same time. You could end up with a lot of money changing hands, which could give us a spike in reverse repos also. So that's interesting, Overstew, that you should mention the volatility index next week. I am watching that, although I don't have any positions in volatility yet. I was going to pretty much sit back and watch next week. I wasn't going to participate. I'm thinking more mid next year, maybe even early next year. Again, I'm watching this chart with the U.S. 10-year Treasury. But it's interesting. Our melons are in the same place, Mr. Overstew. Evergrande is taking forever to crash. That's right, Yawzer. I can't believe how long it's taken. I think the heavy-handed approach of the Chinese government may be playing a role in that. I also think a lot of these banks and institutions don't want this story getting out because they have a lot of this garbage on their books and they're afraid of what's going to happen to them. The ratings agencies, man, like where S&P and Moody's still hasn't downgraded them. Fitch is the only one that's done it. Can you believe that? It's been a week since they didn't pay. I'm sorry, it's been 30 days and a week since they didn't pay. And yet they haven't been down. They've only been downgraded by one of them. It really surprises me. Andrew Conway says, Tether can go any moment. Please explain. Okay. So Tether, the stable coin. First, understand that about 80% of all crypto transactions takes place in Tether. Okay. So when most people in the world buy Bitcoin, first they trade their dollars for tethers, and then they buy Bitcoin with their tether. All right, and Tether is a stable coin. It is supposed to be the equivalent of a US dollar, backed one for one by US dollars. That was the story for years, that the people who run Tether had $1 for every tether that was in circulation. All right, now keep in mind that Tether has the same CEO, CFO, and CTO as the Bitfinex exchange. They are the same people running two different companies. Circle back to that in a minute. Well, the story broke, it was mid last year, I think. They had to pay, I think it was a $70 million fine to New York because the Attorney General of New York sued them because it turned out that them having $1 for every tether was a lie. They weren't backed one for one by US dollars. As a matter of fact, they actually hold very few US dollars. They have most of their assets in what they call dollar equivalents, which is anything from US treasuries to gold to Bitcoin itself or to commercial paper, which is basically IOUs from companies. And the reason why they are under investigation for bank fraud right now stems from a couple of things. Number one, they didn't tell the banks they were doing business with that they were engaged in cryptocurrency transactions, which is illegal in the United States. Number two, Bitfinex had a problem. Bitfinex lost about $800 million. Now remember, Bitfinex, same CEO, CTO, and CFO as Tether. Well, when Bitfinex lost $800 million, all they did was they borrowed $800 million from Tether. So when Tether said they were backed one for one by US dollars, what they forgot to mention was that 800 million of those was really just an IOU from their other company. They were commingling their funds. So then people are saying, well, geez, if they wrote themselves an $800 million IOU to their other company, and that's where my dollars went when I bought tethers to buy Bitcoin, then what other kind of crap are they invested in? And that brings us to China and to Evergrande. Because on Tether's attestation, they have never released an audit. They've never been audited. Now, keep in mind, if Tether were a bank, they'd be like the fourth biggest bank in the world or something like that. But they've never been audited. They've over $70 billion in assets. They've never been audited. They've never published an audit. But they do publish attestations, which is just basically these documents that says, here's what I have, I swear. And on that, it said that almost half of their holdings was in commercial paper. Now, the problem with that is nobody on Wall Street does business with Tether. No U.S. banks have dealt in any commercial paper with Tether. So where did Tether get their 30 billion plus of commercial paper? The only other place in the world where you can get that kind of money in commercial and in corporate debt is in China. So now here's the problem. Tether says they're backed one for one by US dollars, but it turns out it's really US dollars plus a whole bunch of IOUs. And now we have companies are going belly up left and right in China. Were some of those IOUs written by some of these companies that are going belly up right now? And if that's the case, then those tethers that are out there being used to buy Bitcoin aren't really backed by US dollars. They're backed by nothing, i.e., it would only be a Ponzi scheme at that point. And it would be the biggest Ponzi scheme in the history of the world, which a lot of people are accusing them of being. Now, at best, it's just a case of reckless moral hazard. At best, what Tether is doing is taking risk with other people's money for their own benefit, where they assume none of the risk, right? They're buying this toxic sludge corporate debt from China that pays a nice interest rate. They pocket the interest rate, but the people who are taking the risk, the people whose money bought those tethers, they're taking all the risk in that corporate debt. So that's a moral hazard. That's the best case scenario of what's going on at Tether. The worst case scenario is they're just pocketing the money. They don't really hold anything, and it's just one big Ponzi scheme. If that story breaks, the whole crypto market is going to sell off somewhere between 50 and 80% overnight. I mean, it will be instantaneous and it will be bloody. That's what people need to understand with Tether before you buy any cryptocurrencies. Okay, you need to understand that could happen. Now, I still buy cryptocurrencies because that story could break tomorrow. That story could break 5 years from now. That story could never break. I could be totally wrong about that. So Bitcoin could go up another 1,000% before that story broke and then crash 80%. It would still be 3 or 4 times higher than it is right now. Or Bitcoin could crash tomorrow. All right. So it is a very speculative, is a very risky investment. And I don't think most people who are buying into Bitcoin, I don't think fully understand the risk that Tether poses. All right. So that's why I say Tether could go at any moment. Tether breaks, that would be super bullish for Bitcoin or crypto tokens. Not at all, D. That would be incredibly bearish for Bitcoin and crypto tokens. It would take Bitcoin years to recover from that. And keep in mind, big stories like that, I mean, that's happened before, right? We had the Mt. Gox hack. Was that in 2012? I mean, Bitcoin lost something 50 to 80% of its value when Mt. Gox got hacked and screwed everybody. Overstew says house prices should at least go down with higher rates. I agree. Higher interest rates also means housing prices come down because it's all about, can people afford those monthly payments? If the rate goes up, people can't afford to pay the same price for the house because their payments get too big. Don't keep all your eggs in. Very good point, Mr. Yawzer. Sean Palmquist, sir, thank you very much for the super chat, for your support of the channel. I very much appreciate it. Fellow Melonhead, I'm absolutely speechless seeing SPY hit yet another all-time high on the back of crazy inflation. Still understated. Thanks for the vids as always. That's a great point, Sean. And I didn't realize, is that true? Did we hit another all-time high today? You've got to be kidding me. If that's the case, I apologize for not mentioning that in my opening. Jeez, it's kind of a big detail. Are we really at an all-time 4,700? I think you're right. Oh, my God. You are right, sir. I award you 1 million Melonhead points. There it is, closing at an all-time... Wait. Yep, closing at an all-time high. Good God. All right, keep them notice. 5 days. Not even 5 days. That is 1 day after the initiation of the largest bankruptcy since Lehman. Evergrande was downgraded to restricted default yesterday. We made a new high, a new all-time high today. Blow off top, folks. This is a blow off top. And look, what's the quote? Markets can stay irrational longer than you can stay solvent. So we could see months and months of this, or we could crash tomorrow. Sean, thank you, sir, for the excellent comment, and thank you for the super chat. I really appreciate it, sir. I can't believe I missed that we closed at an all-time high. That must have happened in the last couple of minutes. Is that what happened? Did it happen? Yep, it happened while I was running my big fat mouth. Look at that. Big run to close the day. How about that? Let's see. What did precious metals do to close the day? Oh, I'm pretty surprised to see this. It looks like silver went up and stayed up today. Same thing with gold. They went up and they stayed up. Gave back some of the gains. But I was a little surprised to see that, although, still, I think we're down for the week still. But look, folks, we have inflation is at a 40-year high. And silver's at $22. Nowhere near a 40-year high. So I think precious metals are on sale. They are cheap, but I also think they're going to get cheaper. I hate to sound bearish on my favorite of the shinies, but when this sell-off happens, if this sell-off happens, everything is going down. It's not just going to be stocks. It's not just going to be crypto. It's not just going to be everything. Everything's, folks. My opinion, if Tether dies, it will be over for stablecoins, as it is complete BS. I agree, Yawzer. The other thing I'm afraid if Tether dies is those buzzards in Washington, D.C., who are circling overhead right now, may use that as a mandate to seize absolute control or to try to seize absolute control of cryptocurrencies. And I don't want to see that. One of the biggest draws of cryptocurrencies is that they can't mess it up. It doesn't mean crooks can't also mess it up. I don't want the government getting involved in it. No, thank you. They've done such a fantastic job with my dollars. Overstew says, I was laughing at people that bought Dogecoin, but I can't believe it spiked that hard this year. I can't believe what people are buying with their money. Overstew, I too was laughing at the Doge guys, but you know what? The Doge guys probably had a better year than I did. And so did the Shiba Inu guys. So I guess we can laugh at them, but they're laughing all the way to the bank. I mean, it's down. It's way down from where it was. But hey, if you were in those meme coins and you got out at the right time, good for you, man. Good for you. That said, I'm not touching it. There's just so many of those altcoins out there. I mean, there are literally thousands of them. Any one of them could be the next Shiba. Any one of them could be the next Doge. Most of them are just pump and dumps that are going to be worthless. So that's why I stick to Bitcoin. I stick to Ethereum. Those are the only two that I dabble in. I am hoping to get into Kinesis because I like the idea that it's backed by gold and silver. I hope to get into Kinesis. I can't quite pull the trigger yet. I want to see Kinesis get their ACH transfers back. And then I want to be able to say, yes, I'm in Kinesis, and I want to make videos about it and talk about how awesome it is. But right now, I can't do that because I'm just not going to wire my money to some guy in Jakarta. I won't do it because I won't do it. I'm not going to recommend it to you guys. So I really hope Kinesis gets that going, that they bring back their ACH transfers, because the idea of holding gold and silver digitally and earning a yield on it, I find that very, very appealing. But right now, there's just too many red flags when I go to sign up for it. So anyways, I hope that changes. Retail sucker rally. Insiders have already sold. That's right, Nicole Post. And they're selling more. Was it today or yesterday? Elon Musk sold nearly another $1 billion worth of Tesla stock. Adam Aaron sold a few $1 million worth of AMC. I mean, folks, the CEOs are dumping. I mean, these guys have better information than we do, and they're selling. The Fed governors, they sold already. So, again, the people who know more than us are selling, should be telling us something. All right. I'll buy at $19, says Cole Marsh. Are you talking about silver? I think that's a halfway decent price target. I think you might get even better than that. Man, you make me panic now, says Marcus Rashford. Well, I don't mean to make you panic, bud. Sorry about that. Anyways, guys, I have been going for more than an hour, and I have to run out the door because I just got a fire call. So I want to thank you guys for your time. I'm going to end this one abruptly. I apologize for doing that, but duty calls. Folks, I want to thank you so much for your time. Live small and dream big.